Hey guys, this is Yash from Equitymaster, making markets simpler for you. To stay updated, don't forget to subscribe to our channel and like this video. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There's no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. In today's video, we're going to talk about two mid-cap IT stocks, Tata Elxsi and KPIT Technologies. With the swift rise of digital transformation, the engineering, research, and development industry continues to thrive as companies embrace digital trends. Engineering, research, and development is the process of turning ideas into tangible products, services, and processes. But now it's evolving from just design and deployment to include maintenance, regular updates, and continuous data analytics. This has extended the product cycle, significantly offering monetization opportunities for product companies. It has also expanded business prospects for ER&D firms. In this rapidly evolving landscape, India assumes a pivotal role, positioned at the forefront of technological innovation and disruption. Keeping this in mind, let's compare the two players in the space, KPIT Technologies and Tata Elxsi. Tata Elxsi is amongst the world's leading providers of design and technology services across industries. Its operations can be classified into two business divisions, that is, software development and services and systems integration and support. The key customers of the system integration and support division are from the manufacturing, aerospace, government, education, automotive, and IT firms. The primary market for Tata Elxsi are the developed economies of the US, mainland Europe, Japan, and Asia Pacific, with the US contributing 42.5% to the total revenues. Now let's move on to KPIT Technologies. KPIT is a global technology company catering to the automotive and mobility ecosystem, making software defined vehicles a reality. Over the years, it has developed into a leading automotive software provider in embedded automotive software. The primary market for KPIT Tech are the developed economies as well, with Europe leading the pack with 52% of total revenues contribution, followed by the US and Asia. Now let's look at both companies' revenue growth. An important indicator to analyze the potential of the business is the revenue growth. KPIT Tech has clocked in higher revenue growth over the last 4 years. Its 4-year CAGR stands at 48.7%, whereas Tata Elxsi stands at 18.4%. KPIT Tech caters to the transportation segment alone. Within this, the passenger cars and commercial vehicle segments have grown at a healthy pace, contributing strongly to its revenue growth. Unlike KPIT Tech, Tata Elxsi's performance is based on the transportation, healthcare, and media industries. While transportation and healthcare have been growing at a healthy pace, the media vertical has been lagging behind. Now let's move on to the profitability. A company's profitability is best when reflected in its operating margin, which is the operating profit. Tata Elxsi's operating margins have been consistently higher and have grown at a faster pace than KPIT's. Tata Elxsi has also reported an average margin of 30.1% over the last 5 years, whereas KPIT's has averaged 19.1% over the same time period. Now let's look at the revenue per employee and attrition. For IT companies, employees are undoubtedly their biggest assets. Revenue per employee represents how much money a company makes on one employee. In a way, it's a measure of an employee's efficiency. Another employee-related metric which is of paramount importance for IT companies is the attrition rate. This reflects the number of employees leaving the organization with respect to the employees working in the company. For the year ended March 2023, Tata Elxsi and KPIT had a total headcount of 11,864 and 10,297 employees respectively. Based on these numbers, Tata Elxsi's revenue per employee turns out to be Rs 2.7 million, which is little lower than Rs 3.3 million compared to KPIT. It seems that either KPIT Tech's employees are more efficient or the company negotiates better terms with its clients for every employee. On the attrition front as well, KPIT does a better job than Tata Elxsi. Now let's look at both companies' dividend metrics. Dividend measures the additional income an investor can make other than the appreciation in the value of share. The higher the ratio, the better the returns for the shareholders. Most mature IT companies generate a lot of cash as the capital expenditure to grow is minimal, and so they tend to be dividend paymasters. The 5-year average dividend yield is a little different for both companies, with Tata Elxsi being higher at 1.5% compared to 0.9% for KPIT Tech. However, both Tata Elxsi and KPIT's dividend yield is lower than the industry average of 2.2%. So now let's look at the final question. Tata Elxsi or KPIT Tech? Which stock is better? With a strong outlook in place and solid fundamentals, both Tata Elxsi and KPIT are in a sweet spot. While KPIT's revenue growth is 2 times that of Tata Elxsi, the latter's margins are higher. This makes it a stronger and more efficient player in the comparison to KPIT. Moreover, while KPIT Technologies is a pure-play automotive design-led company, Tata Elxsi enjoys relatively diversified revenue base catering to automotive, healthcare and media sectors. However, both companies enjoy large scale of operations and established presence across geographies. That's it for today. If you like this video, do share it with your friends and family. We hope you have a profitable trading day. Happy investing.